And I'm here with Stephan van Calker. He's in charge of the UK and partnerships in the UK for Tink, and Tink are in the open banking space. So Stephan, thanks very much for joining me today. I really appreciate it.
Thanks so much, Chris, for having me. Very excited about today's talk and to have a discussion about open banking, where we are today and the future, of course.
So just start off, I suppose it'd be good just to get your view around sort of like how you've sort of seen open banking kind of rolling out, particularly in the UK, but also across Europe as well, because you're a European company. What's been your experience recently, I suppose, over the last couple of years in terms of rollout?
Yeah, it's a really good question. And I mean, if you look at open banking as a concept in the era of digital financial services, I mean, from the start when we started with like the introduction of credit cards and so on, like in the 50s, 60s, right? And open banking mandate in the UK was given in 2018, in 2019, PSD2 across Europe. So we're just here, right? It's just introduced
just the start.
Couple of years ago, and there are a couple of milestones that are already reached, I think, and is that we see now that we now have 5 million monthly active users on open banking. And if you look a little bit back in time, is that when open banking in the UK, the monthly active users went from 1 to 2 million, it took like 10 months, but to go from 4 to 5 million took just 4 months, right? So I think it says something about open banking is really rolling out. I think like if you talk about like rollout of open banking in as a whole in the UK and Europe, then I think what we typically see is that, I mean, we love to replicate all of our solutions wherever we can, right? And fortunately, we also can in many cases. But there's sometimes also some caveats to be aware of, because right now when it comes to open banking readiness, I would say, and the rollout of open banking, we see that the UK is definitely one of the leading markets, right? Together with some European markets as well, where we see that the banks have significantly improved the quality of the APIs.
Which markets? So you said the UK is further ahead. I mean, which other markets do you think are sort of like leading? I mean, it sounds like the UK is further ahead. It sounds like maybe the Nordics or some of the other markets. Which areas do you think are probably more advanced than others?
That's correct. I think like Sweden, for instance, our home market originally, by chance, we think that's very advanced. Nordics in general, Benelux, Germany definitely catching up as well. We see that a couple of southern and more central European markets, Eastern European markets, they are probably not there yet, where the UK and the Nordics are. But we see across all the 18 markets where we are live today, and where we cover over 95% of consumer bank accounts, we see, if you look today compared to like a year ago, we see definitely that the quality of the APIs is improving.
What do you think's been sort of like hindering adoption in some of the other markets? And what's been sort of like, why has it been able to get so far ahead in the UK? What are some of the drivers, do you think?
I think some of the drivers are, I mean, I think there are a couple of drivers. I think like, and one of the most important ones is a thriving ecosystem of providers also, right? Who build actually propositions on the infrastructure. If you look at the number of companies that have an ASP or PSP license today in place, I think it's about like 700 or 800 across Europe, 6, 7, 800 across Europe, and half of it is actually in the UK. But the thing with open banking is just, I mean, we tend to believe that there's not really a first mover advantage in open banking itself, because you and I, Chris, we can both go to the FCA tomorrow, apply for ASP license, connect ourselves like in the open banking APIs, if I had engineering skills for that. We have a really great engineering team for that, but I don't do that. But basically do that and say, okay, we're live in the UK, right? And we go to Ireland, we connect to AIB and BOI and say, okay, we're live in Ireland. That's all great. But the thing is, then you're definitely not there yet, right? Because you need significant volumes to process through those connections, actually to calibrate connections and reach high success rates. One of the things that's really needed in order to be successful in the market. We have a couple of examples.
The more people use it, the more providers there are, the bigger the adoption. So it's like that network effect, isn't it? So do you think from that we expect to see it sort of like it really sort of taking off in the rest of Europe probably pretty quickly, I would think. But you have to get past that initial sort of like hurdle of having enough providers in the market, or enough services in the market.
Yeah, exactly. I think providers in the market, that's one thing. There should also be, I think, what's really important. I mean, data legislation is also one of the most important pillars, right? And we are fortunate in Europe that we have PSD2, so it's there and it can be used. But I think next to that, I think an actual value creation for both consumers and businesses is also just really important. So users, and then we talk about individuals, they would only provide access to their accounts if there's actually value being created for them, right? So there can be, for instance, to get better control over the finances, where they give permission to do multi-banking, for instance. And we see that in the UK, because of the maturity of the data, the open banking APIs, it's already really there. Across other markets, it's still like in kind of this maturity phase, I'd say.
And so, like, adoptions rates seem to be like a bit of an Achilles heel in terms of getting things started from a consumer point of view. There's been a lot of hesitancy. I remember a few years ago, everyone was quite hesitant around doing that. But do you think the pandemic particularly has helped change it? I mean, has that been like a bit of a turning point in some of the markets where you've got at that sort of critical mass?
Yeah, I mean, interesting point. And we had a quick brief before this chat today, right? So I actually prepared a couple of figures that would be interesting to share, because we have a pretty active research team here at Tink as well, that is very active in the public domain when it comes to on a European level with the OE, with the FCA, and so on, to be like really at the forefront of change in the open banking environment. So we've actually released a very interesting report on it's called Open Banking in a post-pandemic world. I mean, one of the things that we saw there, and that's according to research by Deutsche Bank revenues in 2020, they were at the lowest since 2008, which was actually the peak at the financial crisis, right? And that was lower than where it was at the start of the decade. A couple of things that we have seen in order to actually to recover from COVID and to actually pick up on the digital shift that we've seen, there's some priorities that we've seen the banking executives are stating right now. So that's, first of all, really the continuing the creation of digital services. Secondly, differentiating on the customer experience, but also restoring profitability, right? I mean, there's truly a massive potential for open banking to enable all of those. So maybe to more concretely answer your question, has the pandemic contributed to those increasing adoption rates? I think it has definitely had an impact on the adoption rates as part of the digital shift.
I suppose, yeah. So you're sort of saying, well, maybe not directly from a consumer point of view, but we've all had to use digital, and open banking is being seen by the banking world as like being an enabler for digital. So it's sort of like a roundabout way it's sort of helping, but maybe not directly.
Yeah, absolutely. I think so too. It has basically led to really a reprioritization of the banks, right? You saw basically when COVID all started, was like, okay, how should we secure that our revenues are going? Like people, they cannot go to the local branch anymore, right? Because everything was closed, it was lockdowns, and everything was going on. And thank God we're now back to kind of a normal
We were
life.
just chatting about that, yeah.
But back then it was really about, okay, how do we secure the revenue streams that we've always had before COVID as well? And open banking definitely plays a role in that, as open banking really enables the speed of innovation. Yeah, and platforms such as Tink really help to shorten the time to market for those services.
And what are you seeing in terms of like the main use cases? Because obviously with open banking, you've got access to transactional data, but then you've also got payments is also coming up pretty quick as well, right? So and even with variable recurring payments, sort of in there, and the sweeping stuff sort of coming up further on. I mean, there's almost like competing functionality within open banking. And but what you see in the main use cases that people are really sort of adopting?
I would say also, if you would have asked this question to me like 2-3 years ago, then it would probably have been like in the personal financial management space, because we saw like when open banking got mandated and when it came to use, we saw like lots of personal financial management apps popping up, categorize your transactions and get frustrated by how much you spend on Deliveroo every month. But I think like by now we see more, rather than having like, here's all the raw transaction data and run with it and run your personal financial management on it, microservices deployed, I would say. So one point you mentioned, indeed, payments is really hot right now. In the payment space, we have like a couple of really good use cases already. I think there are definitely three use cases where open banking powered payments work really well. This, first of all, is bill payments. So have a QR code on a bill, or send like a payments link, for instance, and do like a one-off payment there. I think secondly is also for wallet top-ups. That's where it works really well. We work with a couple of investment platforms out there, such as Wealthify, for instance, a robo investment platform. where you could basically, instead of like entering your 16-digit card details and then make a payment, actually you can just, in a couple of clicks, without filling out any manual details, you could directly make a payment. Super easy and smooth. From a security side of things, also think of like the risk for fraud and chargebacks is basically zero, right? Because it goes through the strong customer authentication with the mobile banking app. So that goes. That's the use case where that's definitely getting a lot of traction right now. I can mention another use case as well that we see gets a lot of traction. I think that's in the like the affordability checking space. And I'm not only talking about like for banks and for lenders and for mortgage brokers, but also think of like any process where you do like a soft credit check, right? If you take out a broadband subscription at the telco, or you buy a new iPhone or whatsoever, is that we see that for this like for a couple of segments, think of like new entrants to a country, or like people of young age, 18 to 29 years old, with like a thin credit file. We see that you can, for instance, say if you get rejected in the like the initial credit check, or you come and kind of in the gray zone, you can actually use open banking as like a second chance kind of, and based on real-time data there, identify, okay, what are the income streams that we see, like the real-time income streams that we see on the bank account. So not just salary, but maybe it's like a student, right, who gets scholarships or any other types of benefit on the bank account. And that's is data that's not always recognized by the traditional credit checks.
So on the transactional piece, and let's talk about that piece first. Do you think that's a threat to the credit bureaus? In terms, because you can almost like query some of the affordability data in a way that's probably a little bit easier, and certainly without there being any kind of like a credit bureau hit as well. I mean, do you think it's a kind of a threat in terms of additional layer of data? I mean, I suppose it can be quicker as well, more real time.
Yeah, absolutely. You're summing up all the benefits, Ray. So I almost don't need to go into that. No, but interesting point. I mean, what we see today is that open banking powered affordability checks that basically use as complements to existing methods today. But I could definitely imagine a situation where it's, especially when you go more towards like open finance, even I would say, so that you don't only get access to transactional data, but also to, I know, any other type of data, right? Think of like your reward system at like a supermarket, of your rewards that you get from an airline, or like everything like open finance, which is more like for future. But I would see for the future could definitely be a very interesting, a complete alternative to traditional credit checks. We already see it's adopted and sometimes replaced. Yeah, could definitely get there, has the potential. Yeah.
Certainly from what I've seen, it seems like the microservices piece that you talked about earlier was quite interesting in terms of like, there's a lot of promise around transaction data, and you could do all these like affordability budgeting and those sorts of things, and it feels like it's almost like got broken down into almost like the microservices in terms of looking at particular elements, like how much you spend on a particular thing, or what your income is, or those things, rather than like this holistic piece, which seems like it was maybe a little bit naive in terms of thinking it was actually a lot more complex than we thought.
Absolutely, it definitely is. I mean, it's also about, because you have this like massive pool of data out there, right? Again, if you have your ASP, PSP license, you go out there, connect to the open banking APIs, and you get like the raw data back, and then what, right? So I think it's really about what we've done at Tink, for instance, that we built all those components on top of it, so it's very easy, I'd say consumable by anyone. Would say like, okay, I want to have payments, or I want to do account validations, for instance, right? For direct debit setups, or maybe validate your account to connect to like an e-wallet or something like that. So it's definitely, I think it's really about providing that value add by saying like, okay, this is the data that you get packaged in this product, and this is the problem that we're solving for it. I think it's so important to draft that message rather than just saying, okay, technology is out there and you can run with it.
Trying to frame it in terms of the use case. I mean, categorization, and we've had quite a lot of conversation here around categorization, I suppose, and that's quite a tricky challenge, isn't it? I suppose, in terms of understanding. So if you go to if I'm spending at my local store, I mean, what am I actually spending on, and how does that sort of link back to? And I suppose it just becomes very complicated after a while.
Yeah, it's definitely is. And I think categorization is also so personal, right? I mean, if you say, let's say you go to the petrol station every morning to get your croissant and a coffee, but maybe the other 9 out of 10 they go there to fuel the car for petrol, basically, then it's like a whole different category, right? Well, typically at like a BP or like Shell or whatever, you would categorize the payment, even if it's just like £4 or £5, you would categorize it as a snack or maybe as a coffee or as food or something like that. So
every time I go to the gas station, I usually get chocolate biscuits or something like that, and it's like
there you go.
it's hidden. You see, it's hidden within the fuel spend. You see.
You're one of those that would definitely benefit from like a more personalized categorization indeed. And I think, jokes aside, I think it's like for categorization need is definitely a challenge. And I think it's all about really training the models, right? Because no one size fits all here. I think with categorization is just so important. And interestingly, actually, it's also Tink's legacy product, categorization. When Tink, maybe just to take like a step back in time, when Tink was founded back in 2012, we actually started as a personal financial management app here in Sweden, where you could, with alternative technology, aggregate data from all banks and credit cards and put it all in one app. And it was very revolutionary at that time, right? In 2015, 2016, ABN AMRO, top 3 bank from the Netherlands, they came to us and said like, okay, looks very interesting what you guys do in Sweden. We want to actually replicate that for the Dutch market. We've done that, like white labeled the service, and from that moment very high success rates, by the way. Up today, it's still the number 1 money management app in the Netherlands. It's actually, if we really want to reach many more consumers and accelerate our growth, we have to go B2B instead of B2C. So from that moment, personal financial management, or how we now call money management, is really the legacy product, I would say. Reason I'm mentioning that is that because like over all those years, we've been processing so many transactions and we've been categorizing transactions, so many of those as well. And we have a whole taxonomy in place for that, to categorize those spendings. And by now we process about 2 billion transactions on a monthly basis with all the customers that we're working with. And I think in order to actually build like to train the algorithms and to have a really good machine learning model in place, I think it's really needed to process so many transactions in order to understand, okay, what's the I mean, first of all, to improve accuracy of the models, but also what is the likelihood of a transaction being placed in the right category.
Almost like use the legacy product to then train the categorization going forward.
It's kind of, we know how it was when we were there, right? When we were there in the position of where the banks are now that have this consumer-facing model. Yeah, again, it's so important to have the categorization to do it right. If the categorization is not right, if you see if you and I go like in our, let's say, I don't know, HSBC or Barclays or NatWest or whatsoever, if we go in our banking app and we see that like maybe a fifth of our transactions is wrongly categorized, then would we still use it? I don't know, because it's like too much of a hassle, right, to recategorize everything. So it's really important to have that right, I think.
Yeah. So we talked a bit about transactions. I want to just go back to payments a little bit, because the other thing you didn't mention is there's almost like, I feel like there's almost like this hidden benefit of open banking payments, which is in the background reconciliation of data, and I suppose it's cheaper than card payments as well. So it's probably cheaper than card payments, but then also it's probably better because you can sort of reconcile where payments have come from. Are you sort of seeing that? I mean, how much of that is sort of being visible, I suppose, in terms of like your clients? And I mean, because it's sort of a hidden back office thing, but actually can be quite a headache for a lot of companies.
Yeah, no, definitely. And I think open banking powered payments as a whole, I mean, it takes away lots of I mean, first of all, on the front end, when friction, of course, but on the back end also, when you think about cost, network fees, interchange, all these kind of things, it takes away lots of cost there, I would say. So definitely, it's like it's work on our end to actually work on like the collections and the reconciliation type of side of things, but it does pay off. Like some companies, they have like piece for instance, they maybe take care of the reconciliation themselves. Some for us to take care of it, so we just make sure to have the capabilities in place and work on that. Yeah.
What about, so we've got variable recurring payments that are coming up. I think it's the sweeping mechanism that's coming up. So everyone's getting quite excited about that. And I think it keeps getting delayed, certainly in the UK. Do you think the promise is going to live up to what we think it is? I mean, because we can do payments today, but we can't do some of the more complex pieces. I mean, what's your sort of view looking forward on that? I mean, how excited should we get?
Well, we are super excited about it.
Yeah.
I think variable recurring payments really has a very, very, I mean, we're all convinced of like the the concept, right, and of the potential that is there to replace direct debits. Then I'm talking about VRP Premium, right, to replace like direct debits, and the sweeping itself is very very easy, smooth as well. But when we talk about like setting up a mandate to actually for subscriptions, for instance, is a very strong use case, I think, to set up like a mandate. This is the frequency, this is the value of the amount that's a merchant can take from my account on a monthly basis. There's really strong potential. What the biggest concern is that maybe the banks are not very willing to go very fast on this. Let's see what's how that develops over the coming months. We are very driven, at least, to have like and we have like a couple of like pilot companies lined up that are going to test it with us. We are very excited about the opportunity, but I think it should be more market driven than how to say, regulatory driven from that perspective.
Right.
Yeah.
I suppose that's the better way to have it. And I suppose I'm talking about payments. I'm remiss at this point not to mention the Visa acquisition with you guys. I mean, sort of like what do you think's happened there, and what do you think some of the thinking is behind that? Because we've seen not just you guys get acquired, we've seen quite a lot of acquisition activity in the market, and it feels like there's sort of like a lot of big companies looking at open banking, buying them for potentially for future use cases. So what do you think is driving that in the market?
I think first of all, that these acquisitions happen, I think, is such a strong. It shows so much that open banking is here, right? And it's really gets traction now by the largest companies out there. I mean, if I talk like personally about our acquisition by Visa, I would say that we are. I mean, we will fully operate as an autonomous organization under the Visa umbrella, and I think that has a couple of benefits, because we while we can rely on Visa's investments in such as resilience, cybersecurity, their infrastructure as well, but also think about VRP, right? And Visa works with basically anyone out there, and like major banks as well. That's a really great benefit to work together on that to help VRP get off the ground. And at the same time, we think as an autonomous brand, I mean, Visa also sees that Tink works really well. We're growing enormously with a leading open banking platform in Europe, and with the company culture that we have, and our own governance of working with customers that works really well. We can continue as is, basically. We're super excited about this new chapter for the organization.
I mean, it does seem like open banking is all about data. It's about getting the data and then using that to then take actions on it. And it seems like it sort of speaks to that sort of like data world that seems to be sort of coming through very much so. And so like it's like I mean, there's so much data available, I suppose, and this is another lead into that, I would think.
Working with like larger organizations also enable you to work towards working with more data, right? And actually talking about like data mobility and I mean, when we also talk a little bit about like other markets, right, and open banking adoption, and I think it's one interesting thing that we see as well is that in Australia, for instance, they envision an entire ecosystem of data mobility. So also non-financial data. You don't only have like open banking, but also open data from telcos, electricity, and your water and broadband and all these kind of things. So that's really moving away from all those different silos. There's lots of talks like in the UK and Europe about that as well, right? And still, of course, like Australia is like conceptual, but it's really good to have this vision already. We see other exciting developments already, such as like the 90-day consent period, which was quite an obstacle actually. In the past, like give reconsent every 90 days. That is now kind of like taken away, and also across Europe, 90 to 180 days.
Yes, the 90-day re-authentication process has been watered down in the UK, but it's still there in the rest of Europe, isn't it? So we've seen this like divergence. We're going to see. Do you think we're going to see more divergence with the UK versus the rest of Europe or the EU as that sort of goes forward? I mean, what's your kind of view on that? I mean, how much of a benefit is it, and do you think we'll see more divergence?
I mean, UK has kind of been at the forefront of change when it comes to open banking, being a year before Europe when it comes to the open banking legislation itself. Now with the consent period from take away the 90-day rule, so to say. In Europe, it goes from 90 to 180 days. So you can argue that Europe is putting like a step in between, kind of. It's in the UK also with the adoption is that we see across all 18 markets, by the way, we see like adoption rates. I mean, because there's only so much out there in public, right? And we see lots of things happening under the hood as well. So we see adoption rates definitely going up across multiple markets. But we see in the UK, it's definitely one of, if not the most mature market in Europe. So I think it's not entirely surprising as well, indeed, that from a regulatory perspective, it's maybe like a small step ahead there as well.
From a client point of view, what do you see the main barriers or hesitation around adopting open banking? And what are the big things that people put up to say, well, look, we got to think about it?
I think the term open banking maybe implies, because it has the word banking is it, so maybe it implies that it's just for financial services, right? Well, that's definitely not it. I mean, we work with a couple of telcos and utility providers across Europe and UK already, and some are implementing right now, so some are live. But we see that there's sometimes concerns about the adoption rates that day, but we also know that the companies that are testing, they don't go back to how it was before. It only results in better conversion rates, frictionless user journeys, and so on. So I think in that sense, I think that's maybe one point. I think another point is also the like what we call the incumbent tech stack, right? Is the tech stack actually depends also maybe if like a company works on-prem versus on the cloud, which seems like more like incumbent banks work, of course. Is the tech stack ready, and how big of a project is it actually to implement open banking?
Inertia,
In the past, when open banking started, it was more like the innovative fintechs, right? So it's really cool and exciting to see that we work now with the likes of NatWest in the UK and PayPal as well, and SEB, Nordea, and the Nordics, for instance. So it's American Express across a few markets. So we really see that open banking is not just for the innovative fintechs anymore, but really, it really goes towards mass adoption now.
You raise an interesting point around open banking, and I just wonder, sitting back to something like, I mean, it's actually quite accurate to call it open banking because it's like open data around your banking. But is it named the best way? Because it can also make people like, well, I don't want all my banking to be open. So I just wonder if that from a marketing point of view, and we should have called it something maybe a little bit more cuddly, such as I don't know, enabling financial data exchange or something like that. I don't know. I just wonder if we've misnamed it with hindsight. I don't know. So we can come up with a better name.
Good one. We should have a think about it. Maybe I haven't thought about that personally. I think as long as we keep saying open banking as a B2B term, but we use a much different terminology when like a much different consumer facing terminology, I think it's all right. I think it's we would also not call it like, okay, if you want to make a payment, for instance, make an open banking payment, right? Because then it's like, oh, what's open banking was that? So we would rather call it, for instance, and we've like a whole product design team working on this, right? On different A/B testing and see what works best for adoption as well. So we rather call it like pay by bank, for instance, or pay by X brands payment methods, something like that. Because the thing is also like you can, and that's another like really a good thing about open banking versus card pay or like other alternative payment methods out there. I think a really good thing is that you have such a high control of the UX, basically. Of course, the authentication flow is managed by the bank, but everything around it, you can basically, we've SDKs in place. You can fully customize it to like a customer's own like brands and themes and colors and fonts. So you can really, as an organization, you can really capitalize on your own brand.
It
helps a lot.
You can sort of like embed it within the processes and sort of make it, brand it and everything. So
yeah, definitely.
That's fascinating. So, well, Stephan, it's really interesting. I've got one last final question, which is where do you think we go from here, right? So, as you said right at the very top, like we've come an awfully long way in a very short period of time. It feels like it's been accelerating the last 6 months, even the last 6 months or year. But where do we go next? I mean, obviously we've got open banking payments coming up, we've got VRP coming up, but what's the next step?
And we get this question a lot, right? About what's next. And I think it's really hard, to be honest, to think in general how open banking will evolve. I mean, think back about the introduction of the smartphone back in 2007, right? I mean, who would have thought back then that we would now do our banking on our mobiles?
Yeah.
I think the future opportunity primarily lays in enabling both consumers but also businesses in making better decisions. For example, lending or mortgage decisions, where you don't only have access to transaction data, what's available right now, but also maybe other mortgages that you have, right? Or loans or insurances or savings. Again, many people in the industry talk about the shift from like open banking to open finance. And for Tink, it would actually really mean extending the depth and the breadth of data and creating value added services on that.
Yeah, being able to use the data to sort of really understand the customer situation, and sort of like, and it becomes much more embedded and much more integrated. That's what we can call open banking. We call it smart banking or smart banking. Yeah, or smart finance instead of open finance. It was like, maybe that's the way we should go. I don't know.
Maybe we should go about it. Yeah, it's a good alternative.
Well, Stephan, thanks very much for making the time for today. It's a fascinating discussion. I really appreciate it. It's it's a great service. I mean, those who haven't used open banking, when I use it, and it is fantastic. I mean, just to be able to get extra services, so it's wonderful. So really appreciate you making the time, and it's a great conversation. Appreciate it.
Awesome. Likewise, Chris. Thanks so much for your time.
Thank you.